Welcome, grade 12s. Yes, you're with Ashraf Patel and the crew today, James and Abi. And the journey we're undertaking is a journey on the income statement. Right, now, let's look at the information that we have. We are given the name of the company, Michaela Limited, and we are told the financial year end is the 29th of February 2016. And we also know that we have to do some things before we actually do the income statement. We asked to prepare the asset disposal account. Okay, let's look at the information that we have, and then let's look at the additional information where we are told the asset disposal amount represents the cash received for the sale of equipment on the 31st of December 2015 as recorded in the cash receipts journal. Apart from this entry, no other entries were made. The cost price of the equipment was 66,200 and the accumulated depreciation on the equipment sold was 43,225 on the 1st of March 2015. Equipment is depreciated at 15% per annum on cost. Right, going into the information. Now, whenever you are working with an asset disposal, like I've told you in the past, this is of utmost importance. Depreciation, cost price, accumulated depreciation, carrying value, selling price, profit or loss. Let's take the information into our table from the given information. Right, what are we told? The cost price of this equipment sold was 66,200. So immediately you say, fine, if that was my cost price, put down the cost price 66,200. What was its accumulated depreciation? At the beginning of the year, the accumulated depreciation was 43,225. So therefore, I slot in my 43,225 and immediately I put a plus sign alongside it. Right, what do I know? I know that the depreciation is written off at 15% per annum on cost. Immediately I say, fine. If that's the situation, using art, I say 66,200 as my cost price times my rate, which is 15 over 100, times my time. Now, this is important. When did we dispose of the asset? The asset was disposed of on the 31st of December 2015. In other words, you have used this asset in this financial year for some number of months. How many months exactly? If my financial year started in March, so it would be March, April, May, June, July, August, September, October, November, and December. 10 months. Okay, that means I've used this asset for 10 months in this financial year, and therefore my T component will be 10 over 12. Right, let's get our calculators out. And we say, fine, this is what we're going to do. 66,200 times 15% divide by 12 times 10 is equal to 8275. Right, what is the 8275? The 8275 would be your current year's depreciation. Watch, 8275 as my depreciation entry, and immediately I add it to my accumulated depreciation, 8275, and this will now be equal to 8275 plus my 43,225, and that will give you a figure of 51,500. Right, okay, there's my 51,500. Now, can I calculate my carrying value? Certainly I can. What is my carrying value? My carrying value would be my cost price of 66,200, let's just do this here, minus 66,200. Obviously, I'm just using the shortcut. I'm not going to repunch in the figures to give me a carrying value of 14,700. Now, let me identify what figure appears in my trial balance alongside asset disposal. I can see asset disposal an amount of 15,000 Rand. What am I told about the 15,000 Rand? The asset disposal amount represents the cash received for the sale of equipment. Therefore, this means that my selling price is equal to 15,000 Rand. Clearly, you can see that your selling price is greater than your carrying value, and therefore you have made a profit, and a profit of how much? 300 Rand. So, grade 12s, what have you noticed? Without making a single accounting entry, I have determined that I have made a profit on sale of assets of 300 Rand by merely using my table. Now, let's do the account, because that is what it's asked for, isn't it? Okay, details will be equipment. Now watch how this table will help me. My equipment will have a cost price of 66,200. Done. Accumulated depreciation, total value, accumulated depreciation. Again, I'm abbreviating. You will write it out in full in the exams. 51,500. It's good practice to show that calculation that you've already done there as part of your answer in your ledger account. Okay. It was sold for cash, so that's my bank figure of 15,000 Rand, okay? And you therefore find that you've got the accumulated depreciation, you've got the selling price. Now, this carrying value here is very, very important. There's no entry for it, but remember, we put a big 3 alongside it. Why? Because in my balance sheet, it's going to appear alongside note number 3, my fixed assets note. I'm going to have an item called disposals at carrying value, and that's why I need that information from. Clear, guys? Brilliant. Okay, so now I've got my 15,000 sorted. I made a profit of 300 Rand, debit to asset disposal, and a credit to profit on sale of asset, profit on sale of asset. Again, watch, I have a license to abbreviate. You don't have a license, and there, your asset disposal account is done and dusted. But the important part that I need to emphasize is that all of it is based on this table here. So guys, if you know the table, asset disposal is a piece of cake, chocolate cake. So you know my favorite now, don't you? Okay, let's go on to the next part of the question, where we are asked to calculate from the information, we are asked to calculate the total depreciation on equipment for the year ended the 29th of February. Right, starting off with my balance that I have in my equipment account, 966,200. So therefore, 966,200 was my original cost price minus the 66,200. What is that? The asset that I disposed of. Okay? Let's get that going. So we've got 966,200 minus your 66,200, and that will give you a figure of 900,000. Okay? 900,000 over 1 times 15 over 100, because that's my rate of depreciation. Remember, art, amount, rate, and time. This is all equipment that I've used for the entire year. So all that I say times 15%, and that gives me an amount of 135,000. Remember, this is my depreciation on my old equipment. In other words, the equipment that I used for the entire financial year. Is that my only depreciation? Certainly not. I've also calculated depreciation on my sold vehicle. I don't have to recalculate that figure. Why? Because I know. I've worked that figure out, haven't I? What was that figure? Let's identify it here in my account. In my calculation, there goes 8275. Therefore, take that figure of 8275, edit there, 8275 was the sold depreciation, the depreciation on the sold vehicle, and therefore We got the 135,000 plus my 8275, and this is then equal to 143,275, and that would be my total depreciation that I have calculated. There's one component that I'm not talking about here because it does not apply. And what is that? Remember, no mention is made of new equipment that was bought during the year. However, if there was new equipment, then definitely in this calculation, you would have had, ideally, or in most question papers, you would find sold, old, and new. This particular question had sold, there goes. It had old, there we go. It did not have new, so that was my total depreciation. Clear, guys? Okay, the next one that we had to calculate was the carrying value of my equipment. Once again, take your cost price of 966,200, okay? My cost price at the beginning of the year, less my accumulated depreciation at the beginning of the year. Let's identify that figure. 549,600. Therefore, we've got our figure of 549,600. Remember, that's my accumulated depreciation at the beginning of the year. Okay, now what do? Right? Out with our calculator, and we say, take the 966,200, right? Minus the 549,600. Okay? And that will give me my figure of 416,600. Right. I'm going to give you 1 minute to think about which other items am I going to include when I want to calculate the carrying value of my equipment. Think about, I'll give you a hint, think about note number 3. Go for it. Just identify the other components that I need to bring into account when I'm doing this note. Go for it, guys. Okay, welcome back, grade 12s. What other items can you identify that needs to be part of this calculation? Okay, let's say additions at cost. We know no new equipment was bought, so no figure necessary. What about disposals at carrying value? You remember that one? I said we're going to have to use that particular one when doing note number 3. Let's identify that figure so you can see what I'm referring to. Here we go, 14,700. Can you see it? We've calculated it. So 14,700 will be my disposals at carrying value. Okay, let's just get that figure again. That figure was 14,700, okay? So 14,700 was my disposal at carrying value. Remember, I sold that particular asset and the carrying value was 14,700. And then, what was my depreciation for the year? Recall, we worked it out, didn't we? Here goes. We don't have to look very far. 143,275 143,275 was my total depreciation. I can now complete this calculation, and I've got the 416,600 minus 14,700 minus 143,275, and that will give me a figure of 258,625. 258,625, and voila, I've got my carrying value of my equipment at the end of my financial year. Quick recap: cost price at the beginning of the year minus your accumulated depreciation will give you carrying value. What components do you bring in? Additions at cost, disposals at carrying value, and your total depreciation. Remember, that's your total depreciation on the equipment for the year. And obviously, this then tells you that that's how you calculate the carrying value of your equipment at the end of your financial year. Okay, guys, that was the starter. For the main meal, we have to take a break, and we'll see you in a jiffy. Welcome back, grade 12s. Yes, like we promised you, the main meal. Right, adjustment A has been dealt with, but remember, in adjustment A, we calculated a profit on sale of assets of 300 Rand. Therefore, before we go anywhere, let's make sure that under my income, I've got profit on sale of assets, right, of 300 Rand. So you're going to link what you've done in previous work to your income statement. Okay, now what do I know? I'm told that goods are sold at a profit markup of 50% on cost. The sales amount includes 27,000 Rand for old stock sold to cash customers at 10% below the cost. Interesting one, isn't it? Okay, let's see if we can figure it out. You've sold certain goods be 10% below the cost. So obviously, included in your sales figure of 27,000 Rand, that means part of the 3,402,000, remove the 27,000 Rand first. Let's do that. So, we've got 3 million. We've got 3,402,123 minus the 27,000 Rand. Obviously, we've got to treat the 27,000 Rand separately. And that will be equal to 3,375,000 Rand. So those goods were sold at the normal markup of 50% on cost. Okie dokie. Let's do that. Let's extend our page so we've got place for our calculations. So we've got 3,375,000. Let's just verify that figure before we continue. 3,375,000. Let's do that. 3,375,000. Right. Those goods were sold at the normal markup of 50% per annum on cost. So those you say, cost, which is 100, over my selling, which is 150, times your 3,375,000. So we say times 100 divided by 150 is equal to that, divided by 150, and that will give me my cost price of 2,250,000. Now that's the cost of the goods that were sold at the normal selling price. So 2,250,000, that's my cost of sale, 2,250,000. But that's not my only cost of sale. Why? Because now I need to bring in those goods that were sold at a special price of 10% below cost. So what do I know? 27,000 is equal to 90%, because we are told it was sold at 10% below cost. 100 minus 10 is equal to 90. 100% will be equal to my unknown, cross multiply. Let's do that. So we've got 27,000 times 100 divided by 90, and that will be equal to 30,000. So there goes. The cost price of those goods was 30,000 Rand. Therefore, you add the 30,000 Rand here, and you now say, fine, add the two components. It's your 30,000, remember, plus your 2,250,000. 1, 2, 3, 2,250,000, and that gives you a figure of 2,280,000. Okay, so there's my cost of sales, 2,280,000. That's how you would determine your your sales, less your cost of sales will then give you your gross profit. Let's do that. Again, using the shortcut, minus 3,402,123, and that gives me a figure of 1,122,000. 1,122,000. So what was that? It was my sales less my cost of sales. Clear, guys? Okay, now let's go on to the next adjustment. So we've dealt with that one as well. We are told here that transactions relating to debtors not taken into account. 1. A check received in settlement of an outstanding balance of 3,600, right? Less the 5% discount was dishonored due to insufficient funds. Right, the settlement of an outstanding balance of 3,600, important. The full debt was 3,600. Okay, less the 5% discount. Let's do that first. So, you've got your 3,600 times the 5%, and that amounts to an amount of 180. Okay, now what about the 180? What is it that we're going to do with the 180? The 180 obviously would be the discount that we had allowed to a debtor. Why am I saying that? Because a check received in settlement of an outstanding balance of 3,600 less the 5% discount. So there's your discount of 180 Rand. If you are cancelling the check, remember, you're going to debit debtors control with the full amount of 3,600. So let's just do this so that we have it as part of our calculations, because we're going to need that figure. Okay, let's extend our page. We've got our 3,600, and it's the debtors control that we're talking about. In my debtors control, if I look at my figure, where's my debtors control? 280, 200. So therefore, 280, 200, 280, 200 was my balance in debtors control. Debit my debtors control with the full amount of 3,600, because the entire amount has to be reversed back to debtors control. One part of my problem, but not over yet. I'm going to credit bank with the difference. What's the difference? The difference would be 3,600 minus the 180, which was the discount component, and that was an amount of 3,420. So therefore, if that was your 3,420, just to show you your double entry, the 3,420 obviously affects your bank account, okay? So the 180 needs to be credited in discount allowed, and therefore, under my expenses, I've got discount allowed, open my bracket, identify my figure, that appears in my trial balance, my discount allowed was 6330. Okay, so I've got the 6330. 6330 minus 180. Why? Discount allowed has a debit total. If I'm crediting, I'm decreasing. Therefore, in my final figure, I would say I've got an amount of 6330 minus the 180, and my amount is 6150. 6150 would be my discount allowed component. Right, you may be asking, why did I open up the debtors control? Because you will notice just now where we're going to be using that debtors control component. Going back to my adjustment. I'm told that a debtor with a credit balance of 1,200 must be transferred to her account in the creditor's ledger. An appeal to you, grade 12s. Whenever you are faced with a question like this here, please do the following. Number one, a debtor with a credit balance of 1,200. So, what are we saying? A debtor with a credit balance of 1,200, here's it. Okay? If you want to, obviously, this is just shown to you by way of an example, right? Just to illustrate to you what entry is required. A credit balance, in order to transfer it, you need to debit the debtors control with 1,200. Okay, in other words, this here now, this entry had been done already. The reason I showed it to you, let me show it to you once again. The reason I showed it to you was to show you why am I debiting debtors control. Okay, so this is where your debtors control is standing on at the moment, and what are we going to do now? Take our calculators. Take the 280, 200. 280, 280, 200. Right? That's my balance that was given to me. Plus 3,600 plus 1,200. Why am I doing that? Because I need to calculate my provision for bad debts, which is based on my debtors control figure, and this is equal to 285,000, right? There's my 285,000, taking these components into account, and I need to find out what was my adjustment entry. I'm told that the provision for bad debts must be adjusted to 2.5% of debtors control. So once again, coming back here, times 2.5%, and it gives me a figure of 7125. Right, watch this here. So 7125 is my new provision figure. Let me see what I have in my provision. Where's my provision for bad debts? I've got a figure of 9025. I need a provision of 71. I calculated it, remember? 7125. So 9025. Clearly I can see minus 9025, and that will be equal to 1,900. Notice what is happening. You've got an existing provision of 9025. You only require 7125. When the amount that you require is less than your provision, you are decreasing your provision, therefore your adjustment account becomes an income. Clear? If your new provision is less than your existing provision, meaning you got to decrease your provision, therefore your provision now becomes an income of 1,900. Let's enter that. 1,900 into under my income section, provision for bad debts adjustment, and the amount is 1,900. Okay, now remember, if we were doing the note to the balance sheet, what figure would I show as provision for bad debts? Obviously, there you would say, you would use your new provision, which is 7125. So in other words, you'd say 285,000 as your debtors control or your trade debtors, less your provision of 7125, and that would give you your net trade debtors. I'm just showing you that component of the balance sheet as well. Okay, done and dusted. Let's look at the next adjustment. A stock take on the 29th of February revealed 2,540 Rand worth of stock could not be accounted for. Straightforward, guys. 2540. Immediately I tell myself 2540. 2540, trading stock deficit. It could not be accounted for. You lost stock to the value of 2,540 Rand. Okay, adjustment sorted, done and dusted. Right. At the same time, you are told consumable stores valued at 1970 was not used. Aha, was not used. So therefore, what do? Go back to my consumable stores. Let's find my consumable stores. My consumable stores was 24,770. So starting figure 24,770. Consumable stores 24,770. And what am I told? I'm told that 1970 was not used, meaning it was left over. 1970 was left over, therefore, minus 1970, and then all I do is my calculation, and I take my figure of 24,770 minus 1970, because that was left over, and my figure is 22,800. 22,800 is my consumable stores that will appear as my final figure. Okay, guys? As far as an income statement is concerned, make sure you understand your double entries, and there's more in store for you. So take a quick break, and we'll see you in just a while. Welcome back, grade 12s, and I am sure that you picked up the error that I've made. Did you pick it up? Where is my error? I want you to draw your attention to it. Remember what we said, that the provision for bad debt adjustment was an income, okay? And you can clearly see that I've written it on the wrong place. That's right. So let's correct that. This should be provision for bad debts adjustment 1,900, where under my current income, other incomes, not under expenses, because this year was definitely incorrect. So that's why we have erasers and we work with pencils, so you can correct it. Okay, but like you see, that was an honest error that we made. We're supposed to write it under our incomes because we've been talking about it, and now we have corrected it. Okay, let's go on to the next adjustment. We are told that the rent for February 2016 was outstanding. Note that the rent increased by 7% on the 1st of January. Aha, famous rent increase story. Okay, let's do this. Let's do it so we understand it. Okay, let your old rental be equal to 100. Right? In terms of percentages, your old rental must be equal to 100. For how many months? Again, let's look at the adjustment. The adjustment tells us that the rent was increased by 7% on the 1st of January. So obviously, we started in March. So March, April, May, June, July, August, September, October, November, December. 10 months? Okay. So all rental at 100% for 10 months will give me an amount of 1,000 Rand. Okay? Got it? Right. Then there was an increase of 7%. So immediately you tell yourself 100 plus 7 will be 107 times 1 month. Why 1 month? Because you are told that the rental for, note that the rent increased and the rent for February was outstanding. So immediately you know that obviously this can only be your rental for 1 month. 107 times 1 is equal to 107. What do we do? Add the two components now. That's 1,107 is equal to, what is my rent income figure that is given to me? Let's identify it. Rent income 98523. So let's put it in 98523. What is it that you want to calculate? Remember, you want to calculate the 1 month. And what is that 1 month? That 1 month is a 107 month because it's your rental for February. 107 is equal to my unknown. Right, there goes. Now we take out our calculator and we say, fine. It's 98523, 98523 times 107. Remember, cross multiply is equal to that. Divide that by 1107, and this gives you an amount of 9523. What is a 9523? That's your 1 month rental that is outstanding. Okay, so let's use those figures that we have there. 98523 is my rent income. Rent income 98523 plus what? It's an accrued income. Debit accrued income, credit my rent income, increase my rent income by how much? 9523. 9523, and obviously that will give us the final total that we want, which is 9523. We've got that component there under my rent income. Let's just get it here. We got it here. 985. So we've got, let's get our calculators out again. We've got the 9523 plus 98523, and that will be equal to 108046. 108046. Just check the figure up again. It's 98523, 98523 plus 9523, and that is equal to 108046. Whatever we got there, 108046. Perfect. Okay, so that's how we do the rent income, where we have a percentage increase. Remember, you would add that accrued income to your trade and other receivables if the balance sheet was asked for. Okay, next adjustment. Commission income of 5577 for March 2016 was received and deposited. Okay, immediately identify your two accounts involved. It's commission income, so let's identify our commission income. Our commission income figure that's given to us is 60281. So $60281. Let's just check accuracy. 60281 is right. That's my commission income that's given to me. And what am I told? I'm told that an amount for commission income was received this year for next year. How much? It was received in this financial period, but it was for March. That means not part of this year. Two accounts involved: commission income and deferred income, or income received in advance. Debit your commission income. You want to decrease your income. Credit deferred income. Why? It's a temporary creditor, a temporary liability. How much? 5577. So immediately go in here and you say minus 55. The amount was, it's identified, 5577. Okay, so this is my commission income. Open my bracket, 60281. And remember the double entry, like I said. What was my double entry? We've got an amount of 60281. $60281 minus 5577 is equal to 54704. 54704. That will be my new commission income figure. Okay? All that I do now is I add up all my other incomes, and that will give me the total of my other incomes. Okay, the next adjustment is an interesting one. And we are told that the company had two directors on equal pay from the 1st of March 2015. A third director was appointed on the 1st of September 2015 on the same fee structure. The director's fee, this director's fee for February 2016 was not yet paid. Okay, so it's director's fees that we are dealing with. Let's identify it first. 316,100. 316,100. And I'm going to put it here. 316,100. Okay? And I'm giving you 1 minute to sort this adjustment out for me. Go for it. Okie dokie, guys. Did you figure it out? Let's check. Watch this one here. You have two directors that have been appointed from the 1st of March. Let's just make sure we have the correct information. Two directors on equal pay from the 1st of March. Right. So in other words, if you take your two directors and you say director number 1 was employed for 12 months, starting from when? From the 1st of March 2015 until, so the 1st of March 2015 until 28th of February 2016. Actually 29th of February 2016, because it was a leap year, right? Okay, there goes, 12 months. Director 2 was also employed for that period, namely another 12 months. Okay. Remember, the figure that we're working with is a 316,100, okay? There's it. Remember, we wrote it down from our trial balance. Now, a third director was appointed on the 1st of September 2015, right? On the same fee structure, that means identical. to the other two directors. But this, watch the operative word, this director's fee for February 2016 was not yet paid. Which one? The third one. So in other words, if he was appointed in September, you've paid him for, let's do this, September, October, November, December, and January. So that's 1, 2, 3, 4, 5. 5 months. The third director, number 3, was paid for 5 months. Okay? Clear? What do we do now? Add. 12 plus 12 is 24 plus 5 is 29. Watch what I'm going to do. Take my calculator and take the figure of 316,100 divided by 29. And that will tell you what each director had earned in 1 month, an amount of 10,900. Got it? The adjustment clearly said this director, the one that was appointed, the new guy, was not paid for 1 month. And that's where we got the figure of 10,900 Rand from. Okay, so what do we do? In my income statement, I've got director's fees, 316,100, right? And my adjustment was what? Remember I worked it out? It was an amount of 10,900, it was outstanding. Debit director's fees, credit accrued expenses, 10,900. So, plus the 10,900, obviously we're going to add that together. So we got 10,900 plus the 316,100 to give me a final figure of 327,000. So 327,000 would be my director's fees. What was the figure? Let's just identify it before we put the wrong figure in there. 327,000. Okay, so 327,000 is my director's fees. Well, guys, unfortunately, we have come to the end of our flight, and we haven't managed to do a few adjustments. I'm sure you will manage them by yourself. Look at the memo, and I'm sure you'll be able to handle it. So clearly you can see what is important. Whenever you are working with an income statement, also ask yourself the question, which components of the balance sheet are required, so you know which figures you're going to be needing. Make a note of those figures or enter them directly into the relevant note that is required. Well, guys, the end of another accounting flight. From myself, Ashraf Patel, from James and Abi, we wish you well and hope that you will be at your best and always be an accounting shining star. Until next time, be good. Cheers.